Now it's time for On Point, where we speak to experts to delve deeper into the biggest news stories in the spotlight right now. It was the Fed's biggest move of the year thus far. Officials at the Fed have unveiled the first steps they are taking, as we heard there, to normalize monetary policy after they held that two-day meeting that wrapped on Wednesday US time. The Fed says it's going to move much more quickly away from its easing policies, and the stage looks set for possibly three rate hikes during 2022. Not only that, but there could be 3 to 4 more hikes the following year. The Fed is also slashing their asset purchases by twice as much as previously announced, putting the Fed on track to terminate that particular program in March.
So what does this mean for financial markets and investors, not only in the United States, but also here in South Korea? For the answer to that question and more, we connect to Chio Jimio, Associate Professor of Finance at Hanyang University. Thank you so much for joining us.
Pleasure to be on the program. Thank you.
Well, Professor, at this point, it's quite hard for anyone to remember what a normal monetary policy looks like, as the policies are so far removed from what they were like 20 years ago. The Fed's held rates at nearly 0% for much of the past decade. And well, with this shift away from easy money, do you foresee panic in the markets, or was the Fed's move already priced in?
Well, first of all, today Dow closed up by about 1.1%, now 2.2%. So the market is certainly not panicking. Now, this is very obviously the FOMC's decision today is very different from what we were seeing in September when they were forecasting 0 to 1 hike for 2022. But at the same time, though, it was largely expected by the market. So the inflation figure that got released for November, year-on-year inflation increase of 6.8%. So people were expecting that the Fed would react rather hawkishly, which they did, but they didn't react too hawkishly beyond what market expected, and an element of uncertainty has largely been removed. So that's the reason pretty much why the market had a positive reaction for later today and this afternoon, I would say.
Right, so we know almost certainly now that the Fed is going to start hiking rates and do so relatively quickly. Now, some people out there argue that rising interest rates aren't necessarily that bad for stocks and investors. What's your opinion on that? Are higher interest rates good, bad, or neutral for people investing in stocks?
Well, there are two sides to that answer. First of all, what I would say is that stocks are determined by two things: earnings and how people perceive risk. So inflation creeping up has been one of the major risk factors and Fed not dealing with them would create actually an added element of uncertainty. So this is almost like a Fed going on the defensive and trying to take control of the inflation narrative, and removing that risk can actually be a positive thing for the investors. And another thing that I would add is that this would affect the markets very differently. So, for example, it's a bad news for the banking sector, which generally borrows short and lends long. But tech in healthcare sectors have been rising quite well. And I think that trend will likely continue further into the future, I think.
And Professor, well, here in South Korea, people just love speculating on crypto, with the biggest exchanges sometimes actually seeing more volume in a day than the benchmark Kospi. And it's been said that the Fed stimulus program long bolstered Bitcoin's allure as sort of a hedge against inflation. So a reversal might actually be bearish. So given cryptocurrencies, given that they're way more volatile than stocks, do you think any disruption will be far more acute on crypto markets?
So I was just looking at the figures, and Bitcoin and Ethereum have both been rising in response to the monetary policy. And actually, it's really down to this element of uncertainty and risk being removed. I mean, we heard from early on in the program regarding the Omicron variant, and there are a lot of uncertainties. And Fed moving very much in line with what investors are expecting. They are obviously hawkish, but not hawkish beyond what the investors were expecting. I don't think that's going to create a huge layer of uncertainty for the investors, be it in equities or cryptocurrencies. Now, having said that, cryptocurrency does tend to be very much more individual retail investor with a very sentiment-driven market. So that may behave slightly different to what we're seeing on the equities within the next few weeks or even months to come. Yeah.
Yeah, in Powell's press conference after, he did say a couple of negative comments about cryptocurrencies that kind of pushed down Bitcoin and Ethereum for a little while, but seem to be bouncing up a touch. Yeah. Finally, though, we all know by now that the Federal Reserve's decisions ripple around the world. Just how acutely will Wednesday's announcement, or any other big announcement by the Fed, how does it affect South Korean stocks? And would you say that the Fed has much more sway on local markets in emerging economies like South Korea, but in South Korea's case, the Fed has more influence than anything the Bank of Korea could do?
I would say that's actually the case, especially because of Korea's export-driven economy and the fact that our exchange market is pretty much reliant on won to dollar. But again, I have to go back to this expectation management thing. So investors were expecting the Fed meeting to end hawkishly, and actually they did end hawkishly, but not more so than what they were expecting. So I don't think there will be a huge ripple around Korea, or for that matter, most of the other emerging markets in Asia. And given that, it could even be a bit of a Christmas rally going on with the layer of uncertainty removed. But it'll be an interesting few weeks ahead, so I would say.
Professor, we really appreciate your insights today. Thank you for joining us.
Thank you very much.